I think I'm up 5% for the day to new highs again, up 100%. And that was mostly due to Pitney Bowes. Wow. You know what? I'll let Godfather speak to the magnitude of the beat, but let's just say that, we were perfect on this in terms of the levels too. This morning for a Discord, I said 905. You want to buy this thing at 905? Resistance is at 10. Look at this, 901 to 995. So we just killed this on the thesis and to earnings on the execution. Godfather, you're the fundamental guy. So why don't you give your opinion? First of all, how did we know this was coming? We were in this with high conviction. Both you and I were on board, which is great when we both agree. But why don't you go through the history a little bit about how we made this trade work and maybe your thoughts going forward?
Yeah, so initially I'm not that attracted to companies that are shrinking to grow, if you will. But this is a really unique situation in so much as that there's just so much meat on the bone and it wasn't being appreciated by the market. It's nice also to have an offset in a portfolio that's full of growth and momentum stocks. So when you can find something that's trading around 7-8 times earnings or around 5 times EV/EBITDA, there's really not a lot by way of downside. And time again, these guys have been setting metrics to the market and then beating them.
Yes.
And so they do a very good job, I must say. One of the best I've ever seen in terms of putting KPIs out there to the market. This is what we're going to do, and then every quarter, sort of gauging their progress against those KPIs. And in this quarter, on the call, it was a knockout of the park. They beat on every single metric. And, as I said in our Discord community after the call, my biggest takeaway from all of this is when I get down and sharpen my pencil on the numbers, it looks to me like they continue to sandbag on everything from, their debt refinance opportunities to their cash optimization, to the, straight up cash tax recovery that they're going to be able to obtain here, the cost savings on the top line, the contributions from some of their, sub revenue lines that people aren't that focused on, like global financial services, for example, which is an area that I'm post-quarter going to spend a little bit more time on. I think they're being too pessimistic on the product migration headwinds that they're seeing in Centec. So, look, I think that, despite what they showed in terms of progress, they've given themselves the ability to beat that bar again in the upcoming quarters. I think that it's still
by the way, people are asking which stock we're talking about. It's PBI, Pitney Bowes.
Yes, Pitney Bowes. Pitney Bowes. So look.
Are we not showing fully here? Can you see the ticker? Yeah, you can see the ticker.
Yeah, I can see it. The screen showing.
Okay.
So the last thing I'll say on this is, multiples are a function of growth and margin. And they've been able to improve margins materially through cost cutting for the most part, but also optimizing operations by doing tuck-in acquisitions. A big part of their pre-sort business, it's a volume business. So it's about getting to scale. Now nobody can really compete with them. So, they're going to be able to price themselves into new business. And, essentially all these guys that are doing it internally are going to now outsource to them. So the one thing that they mentioned on the call, and they said, point blank, you're going to hear more from us about this going forward, is actual growth, which has been the one part of the puzzle that's been missing. So there's a lot of ways that you can skin the valuation here and get to a number on a fundamental basis that's close to 15. But the market's not going to take it there. It's not going to expand the multiple and get it there unless you can actually start to show that this is a business that can return to growth. And they've already, basically sowed the seeds of that. And I think you're going to see more of that, and you're going to see multiple expansion. So there's very, very little downside to the stock here.
Very safe stock to hold.
Yeah.
Safe stock to hold. I have a big position in my retirement account of this right now.
So, one of the things that we do, and I think do really well in our community, is isolating names that deserve to be core positions and then trading around them. Buying dips and selling rips, knowing when the market is being too brutal, or knowing when the market is being too enthusiastic, and that can really juice returns over time. But Longer term, just buying and holding this thing, it's a safe name. And I think this management team has proved itself out. And I think there's a move to double digits here. So that's a lot of upside on a 960 stock. Mid double digits, I should say, $15.
Yeah, Sidoti came out, increased the price target this morning from 15 to 17. I do want to back you up on that you think they're sandbagging. I forgot to mention this last night, but just a couple weeks ago, they guided for revenue 505, I believe, to 515, and they came in at 516. And they must have known that they were going to beat that 515 when they set that range, right? That was after the quarter ended, I think, when they put that out, right?
Yeah, and the big thing that I'm looking at here is the free cash flow generation. And
huge.
When I go through and I look at the sort of refi opportunities that they have on the debt, and they were asked about it a couple of times in the quarter, and they one of the analysts was basically like, "Why are you guys not more enthusiastic? Because I've crunched the numbers and I get to X." And they were like, "Well, we'll just maintain. We share your enthusiasm, but we're going to maintain our numbers," which essentially is reinforcement to my view that they're holding back, which is what good management teams do.